Alright family, so we're going to start getting into the content here, guys. One of the first kind of major things we're going to focus on, is the concept of following the money, how we do so, different routines we can have on a daily basis to identify where the big money is going. But as you all know, we're not trying to sit in front of the charts all day. So one of the first things, guys, I want to talk about is reading trends and identifying those ideal entries. Now, remind you guys, a lot of what I'm going to discuss with y'all in the course is my personal approach to trading. So it's not that, I so much want you guys to take the exact things that I look at, and do the same exact things. More so, guys, what I hope you see over the next couple of weeks is that, as a trader, you want to have a foundation. Certain things that you focus on week in and week out that, allow you to have a structure to your trading. So you guys might pick different moving averages, you guys might pick different setups, etc. But it's just the whole thought process, guys, of having a foundation to your trading. So with that being said, what I'm going to talk about, guys, is the 21 EMA, right? The 21 period EMA. Now, like any other indicator, it's not magic. However, at least for me personally, it can serve as a big part of the foundation of our trading in several different ways, and that's kind of where the magic is. It can make it easier to read trends, it can help identify an extended stock, and it can help identify an ideal entry level. So those are the things, guys, that I use the 21 EMA for. Reading trends, identifying ideal entries, and identifying when a stock has probably ran away a little bit too much. So the structure that I use with the 21 EMA, a couple of notes here. When a stock or the market is above the 21 EMA, that stock or the market, guys, is tending to get ready for a move towards the upside. Now, in the event that that move begins and we begin to trend towards the upside, that trend tends to continue as long as the market or the stock holds above the 21 EMA. Now, when a market or a stock is below the 21 EMA, that is when, guys, things are liable to get either a little bit choppy or a little bit ugly to the downside. And in the event that we do begin to move towards the downside, that trend tends to continue as long as we're underneath the 21 EMA. So, simple way to look at it, above the 21 EMA is potentially bullish, below the 21 EMA is potentially choppy or pretty damn bearish. Now, one of the biggest things, guys, that I use here with the 21, is the concept known as reversion to the mean. So the 21 EMA kind of serves as, home base, so to say, for the price of a stock. Or in other words, uptrend, downtrend, regardless, at some point, guys, the stock is always going to come home to meet back with the mean. It's going to make the reversion to the mean, coming back towards that average price. These pullbacks to the mean, the reversion to the mean, offer some of the best swing trade entries that the market has to offer in some of the best trends that we're going to find. And as far as the concept, guys, of what is an extended stock, as swing traders, we want to focus on ideal entries in nothing else, right? We don't got to catch every trend, we don't got to catch the entirety of every move. We want to have a structure, guys, of getting those beautiful entries that require, right, not much attention, but give us a phenomenal risk reward. So as far as getting a sense of the stock is a bit too far gone, my rule of thumb, once a stock is 3 to 4 average true range of moves away from the 21 EMA, the probabilities are beginning to rise, guys, that that trend's going to, at the very least, run out of momentum or oftentimes make the reversion to that mean. The ATR, that's the average true range indicator. I'm going to show you guys how to set that up tomorrow morning, but the average true range just measures a stock's average move up or down over the last 14 sessions. Right? So what I'm saying, guys, is once the stock is about 3 to 4 average moves away from home base, it's a little bit too far gone for me. So now what I want to show you guys is how I use this structure to kind of go about my day as a trader and identifying where am I looking to take entries, or as is the case right now, things are a little bit too far gone at this point. Now here, guys, is what's pretty interesting. If we look at the SPY right now, the SPY itself is only about 1 average true range move away from the 21 EMA, right? So by no means are we extended, But at the same time, we can't be shocked if we got to pull back towards a 21. But by no means is the SPY itself extended. We go look at the Qs here, right? The technology index. It's a different story, guys. Tech has been super strong. Tech stocks are leading the way. Big money's been piling into the Qs. The tech sector here is a good 3 ATRs away from that 21. It can absolutely continue to run further, but we want to, have this context here, guys. Knowing that while the SPY itself isn't really, so to say, at risk of a pullback, we just shouldn't be surprised if we do begin to see one in the Qs, right? So again, nothing is ever guaranteed. We can easily continue to run, but we want to have this context, right? We want to just kind of get a sense, guys, of what would make sense. The way I'm looking at the market right now, based upon how strong these names have been moving, it definitely makes sense that we could continue to move. However, given the fact we're a good 3 ATRs away from the 21, also makes a heck of a lot of sense, guys, that we either slow down and just take a breather, or we get our reversion to the mean, which you can see happens time and time and time and time again, pulling back to the 21 EMA here, coming back to home base inside of a nice trend. So this is important context for a swing trader right now. We know as a general statement, guys, right, that beautiful, ideal entry on the pullback to the 21 is pretty far gone at this point. So we're almost, guys, in a situation where rather than looking to get super aggressive and continue to play this momentum, we're more so prepared for this thing to begin to come back in. Right now, you can structure trades where you can continue to play towards the upside, but we want to have this context. So knowing that the Qs here are 3 average true range moves away from that 21, what does that tell us, guys, right? It tells us that a lot of these tech names that have been leading the rally here are probably a little bit potentially extended. So if we take a look at something like, say, Amazon, which I got a position in at the moment, we look at Amazon here, guys. Come on, you. Here we go. We take a look at Amazon. We're about 4.5 average true range moves away from the 21 EMA. Can the trend continue? Absolutely. Should any of us be surprised if Amazon bare minimum slows down or begins a nice little healthy reset? Right? We should not be surprised at all, guys. Notice how it does it time and time again. Regardless of how explosive the move is, it either slows down long enough to meet up with the mean, or you get that nice pullback. So, I got a swing position in Amazon this morning. Lucky enough, guys, to get in here early enough to catch a good bulk of the whole move here today. But if I didn't have an entry, I really wouldn't be looking for one at this point. It could continue to run. I'm just not looking to put my money into the chances that it does continue to run significantly. Check out something like Tesla here, guys. 6 average true range moves away from the 21 EMA. Could Tesla continue to run? Absolutely. Do I want to be taking entries for a swing position up here? Absolutely freaking not. Down here on the pullback to the 21, right? We made money on that one. We made some nice money on that one. We made some nice money on that one. And then last week, made some nice money on that one. But not here, guys. She could keep going, but I want those high probability, low stress, easier paychecks taking entries down near the 21. So a lot of these names, unfortunately, are looking pretty damn extended here right now, guys. I mean, Apple, let's see. Apple, guys, is at 374. 21 EMA down at 352. So we'll say, guys, we're 20 bucks above the 21 EMA. Well, Apple has an average true range at the moment, and I'm going to show you all how to set this up tomorrow morning, of about 8 bucks. So again, you're 3.5 or so average true range moves away from the 21. Can it keep going? You bet. Do I want to take a swing trade entry here? No. Where do I want to take a swing trade entry? Right back here at home base. Right, over the last couple of months, guys, Apple's giving you 1, 2, 3, 4 shots here to get a nice easy entry and catch some of the most beautiful moves the market's given us this year. So The reason I'm putting together this quick lesson, guys, is to share with you, my mindset and how I'm structuring my trading right now. A lot of these names, majority of them, the semis, the tech names, they're just a little bit far gone past my ideal entry point for a swing trade. Doesn't mean I won't take a potential, short-term 1 or 2 day trade, and those are things we'll discuss. But as far as those bigger picture swing trades, where we really get, looking to get some meat into the play, not at the moment, guys. I don't want to be going long for a swing trade in Amazon here. I don't want to be going long for a swing position in Tesla here, right? Does that make sense? We want to be patient enough to wait for those ideal entries, because if you do, look at Tesla. Over the last month, right? The last month or so, guys, 2 months, she's given you 1, 2, 3, 4 opportunities to get swing entries and catch 1, 2, 3, 4 big ass moves. I promise y'all they're worth waiting for. So with that being said, that's kind of the boat that I'm in at the moment, guys. I love the position I got on Amazon. I'm pretty confident she's not going to fall 7% over the next couple of days. So I feel relatively confident I'll be able to collect the paycheck on that one. Aside from that, though, I'm not looking to force the issue. We got to trade what the market gives us. I'm going to be open with you guys throughout the whole course here about position sizes, profits, losses, etc. The profit for that Amazon trade, if it closes above 28.50, which again, anything can happen. We don't want to fool ourselves into thinking the opposite. But looking pretty good at the moment, guys, to get a close above 28.50. So max profit on that put credit spread is about $2,200. That's nothing to laugh at by any means. If I can collect that much profit and there's no other opportunities, right? Everything's extended, and then it is what it is, guys, right? I'm happy with that. More than happy with that for only really one opportunity this week. Nothing wrong with that. So I'm going to continue to be patient. And for me, guys, on these bigger picture swings, you just kind of waiting on the next dip here. It's as simple as that. You swing them when they come home. You lock profits. You just patiently wait for the move back in. So you guys will see me with my personal trades over the next couple of days or so. Being really patient. And basically, guys, just going to ride the wave out here on big old Amazon. Right? Nice little move here after hours. But we're down there at 28.50. So here's how I kind of look at these guys, right? I'll open a 5-minute chart tomorrow. Remember, I need to close above this level. That's it. We close above that level Friday. We stay above that level leading into Friday. Those puts I shorted, they're going to zilch. So what I'll do, guys, right tomorrow is I always got a chart of the market open. But, I'll get a chart of Amazon and I'll put up something, right, silly, like a 5-minute chart. And if I can't even see, right, that orange line that represents, where I sold those puts, I ain't got anything to even worry about. So we'll see what tomorrow brings, guys. But with that 21 EMA, given where we are right now, I'm not looking to get too aggressive. So hopefully that makes sense. We'll definitely be talking more about this. But until tomorrow morning, guys, I'm going to bed. I'll talk to you soon.